Here is a summary of the FedEx Q4 Fiscal Year 2025 earnings call transcript, focusing on key financial metrics, management outlook, risks, highlights, and lowlights, suitable for reading aloud. Good day, everyone, and welcome to the FedEx fourth quarter fiscal year 2025 earnings call. We begin today with a somber note. As you know, we are all deeply saddened by the recent passing of our founder, Frederick W. Smith. Raj Subramaniam, FedEx President and CEO, opened the call by honoring Fred's extraordinary legacy as a visionary who revolutionized the delivery industry and built one of the world's most successful companies with integrity and a focus on people and customers. Fred's unwavering mission and commitment to excellence will continue to guide FedEx. Following succession plans, Brad Martin has been elected as the new chairman of the board. Raj then highlighted FedEx's solid finish to fiscal year 2025, marked by another quarter of adjusted operating income growth and expanded adjusted operating margin, despite a challenging demand environment. This performance is attributed to the ongoing strategic transformation and the successful execution of their Drive Structural Cost Reduction program, which delivered $2.2 billion in savings for FY 2025, achieving their two-year target of $4 billion against the FY 2023 baseline. Network 2.0 optimization is also progressing, with initial optimizations in large, densely populated markets. Capital intensity was lowered, and $4.3 billion was returned to stockholders. These achievements were accomplished despite significant headwinds, including the expiration of the U.S. Postal Service contract, 2 fewer operating days, and global trade policy volatility. Key financial metrics for Q4 FY 2025. Consolidated revenue increased by 1% year-over-year. Adjusted operating income grew by 8% year-over-year. Adjusted operating margin expanded by 60 basis points. FedEx Corporation results achieved a 9% increase in adjusted operating income on a 1% revenue increase, demonstrating strong operational leverage. FedEx Freight, while volumes remained pressured, sequential improvement was noted, and profitability was protected with a Q4 operating margin of 20.8%. Earnings per share, EPS for the full fiscal year 2025, consolidated adjusted EPS was $18.19, showing 2 consecutive years of earnings growth. Management's forecasts and outlook. Q1 FY 2026 revenue expectation forecasted to be flat to up 2%. This range includes approximately $570 million in revenue headwinds from the U.S. Postal Service contract expiration and recent trade disruptions. Q1 FY 2026 adjusted EPS range projected to be between $3.40 and $4. FY 2026 transformation savings. FedEx expects to achieve $1 billion in transformation-related savings, encompassing both Drive and Network 2.0 initiatives. Full-year outlook. While a full-year outlook for adjusted EPS was not provided due to macroeconomic uncertainty, the company remains committed to transparency and will resume providing full-year guidance as visibility improves. The company anticipates the U.S. Postal Service contract expiration will be a near-term headwind, primarily impacting the first 4 months of FY 2026 and potentially skewing normal seasonality. Significant risk factors. Global demand environment remains volatile, necessitating close customer engagement and capacity management. Global trade policy changes. Ongoing evolution of trade policies and trade barriers, particularly the impact of tariffs on international export volumes, especially the China to U.S. lane. Industrial economy recovery. The pace of recovery in the industrial economy will influence B2B volume performance. Fuel surcharge and yield management, maintaining pricing discipline and managing yield in a competitive environment. Operational complexities. navigating increasingly complex global supply chains and regulatory environments. Highlights: successful Drive program met the $2.2 billion cost reduction commitment for FY 2025 and the 2-year target of $4 billion. Network 2.0 progress. Optimization is accelerating, with a significant portion of average daily volume expected to flow through these stations by the end of June. Capital allocation. Reduce capital intensity significantly, returning for $0.3 billion to stockholders in FY 2025, exceeding their commitment. Share repurchases totaled $3 billion for the year, and the dividend was increased by 5%. Capital spending was at its lowest in over a decade. Operational leverage demonstrates strong operational leverage, with significant adjusted operating income growth on modest revenue increases, particularly at FedEx Corporation. Commercial strategy execution. Focus on high-margin B2B segments like healthcare and automotive is showing positive results. Achieving the CPA certification in healthcare logistics is a significant milestone. Flexibility and adaptability. The Tricolor strategy and data insights enable rapid adjustments to the physical and digital network in response to changing trade flows and demand. Freight performance. Sequential improvement in FedEx Freight was noted, with efforts focused on revenue quality, service, and pricing discipline ahead of its planned spin-off. Freight spin-off. Leadership team is being assembled for the standalone FedEx Freight Company, with Brad Martin appointed chairman of the board of FedEx Corporation and John Smith as president and CEO of FedEx Freight. Lowlights. Pressured B2B volumes. Higher margin business-to-business volumes continue to be pressured, impacting FedEx Corporation and Freight results. International export headwinds. The China to U.S. lane experienced a material headwind due to escalating trade barriers and tariffs, particularly impacting Q1 projections. U.S. Postal Service contract expiration. This represents a significant, ongoing revenue and operating income headwind, especially in the early part of FY 2026. Most important statements from management. Raj Subramaniam, President and CEO, on Fred Smith's legacy. Fred was a visionary who revolutionized the delivery industry. His legacy will be felt for decades to come. He emphasized continuing his work with the same passion and purpose. On performance, we delivered a solid finish to FY 25 with another quarter of adjusted operating income growth and adjusted operating margin expansion, despite a challenging demand environment. This performance reflects the progress we have made on our strategic transformation. On Network 2.0. Network 2.0 is the next leg of our structural transformation, and it is well underway. He highlighted the progress in optimizing markets and the significant savings opportunity it represents. On global trade, we are at the center of a global trade ecosystem. We connect 99% of the world's commerce. Our Tricolor strategy enables us to adapt our own network faster than ever before. On future outlook, the global demand environment remains volatile. We're staying close to our customers to help them plan and adapt. For FY 2026, we expect to achieve $1 billion of transformation-related savings. John Dietrich, Executive Vice President and CFO, on Q4 results. I'm very pleased with what we achieved in Q4. This includes the actions we've taken to increase stockholder value, our discipline on CapEx, and the transformation we advanced, all while navigating a very complex environment. On capital allocation, I'm extremely pleased that we both significantly reduced our capital intensity and returned $4.3 billion to stockholders in FY 2025. This was well above our previous $3.8 billion commitment. He highlighted the lowest capital spending in over 10 years. On transformation savings, we expect around $1 billion in incremental year-over-year benefit from our transformation-related efforts, which include structural cost reduction benefits from Drive and Network 2.0. On demand and leverage. If we see a recovery in the industrial economy, we're well positioned to see strong leverage to operating income. We have the even with B2C volume increasing. We are seeing now significant operating leverage. On freight spinoff. We plan to host a FedEx Corporation Investor Day in Memphis in early calendar 2026. We expect to spin off freight in June of 2026. Brie Carrere, Executive Vice President and Chief Customer Officer, on customer navigation. I am proud of how we are helping our customers navigate this challenging period. On pricing environment. As I did mention in my prepared remarks, we do see improvement in the pricing environment, which is encouraging. I do want to note that this is compounded with our team's focus on revenue quality. On commercial strategy. Our emphasis on B2B, small and medium-sized businesses, Europe, and air freight is a deliberate approach to capitalize on high-margin market opportunities while diversifying our revenue streams globally. On global trade impact. Our international export revenue was flat, reflecting the tariff-related impact on our Trans-Pacific trade lane. From a year-over-year perspective, we will have pressure on the Trans-Pacific lane. In closing, Raj Subramaniam reiterated the company's commitment to honoring Fred Smith's memory by continuing to build the company with passion and purpose, guided by his motto, "Waste not a moment." Thank you.